big day of earnings. Let's start with Microsoft. It was a pretty good report, pretty much beating across the board. Why did it sell off? Well, it's this cloud growth. Anything to do with artificial intelligence or these data centers, that's where Wall Street wants to see growth. A slight miss, just 0.2 of a percentage point, but pretty much across the board looking pretty good. Then let's look at the chart, just to put it in perspective. Melting through this uptrend and caught a bounce here. You can't really see it, this black line. Not a bad place to bounce on the 200-day EMA. And now it's around 410. So it's right back up toward this trend line. And maybe this is a sideways to down type situation for the time being. But revenues beat, earnings per share beat, year-over-year growth 15.1%, 18.8% in the cloud, productivity up. You'd really have to be worried about the valuation to be a bear here. Let's look at AMD. AMD up in the aftermarket, hours of trading, beat on revenue, beat on earnings per share, although a slight miss on the generally approved accounting practices, but a slight beat on the estimate for moving their products. And the reason why we have to use these charts is because you have to look at the positioning of the chart. AMD is about to lose this mega trend here, and then it has decent enough earnings to justify a bounce. Okay, so if you're just looking at the after hours trading and you see, Microsoft down, AMD up, it must be one reported poorly, one reported favorably. The charts are going to have a little bit more information. We got our Fibonacci's here, holding above 144, around 145 on the 0.618 would be decent. 160 overhead is resistance. We're right in that middle spot, probably 150, 155 is where we're going to open tomorrow. And let's see, we might just chop around in that range. PayPal, this was a great one. Great one. Triple beat. They're doing well. They raised their forward guidance in terms of their free cash flow and their approved additional buybacks from 5 billion to 6 billion. Okay, so that earnings per share should be increasing from here. Really not a lot to dislike unless you wanted to split hairs here with the take percentage, or what is it, the whatever it is. I'm not an expert in these granular details, but PayPal's been undervalued for quite some time. But again, look at where we are in the context of the chart. So we held this little mega trend we're forming, but we got plenty of resistance overhead. 64 is, we're not in uncharted territory. We've been here, we've been higher even in January of this year. We got to 70 or so after last earnings. Let's see if we can hold here. Good sign. Wedge gets tighter. Maybe we can finally start to break out, get out of base stage 1 into a stage 2 uptrend. Let's see. But I think it's safe to say Wall Street understands that this may not have the best growth story ahead, but it's certainly undervalued here. Unless Apple were to come out or some other mega cap were to come up with a competitor that could put PayPal out of business, PayPal should be undervalued. But we've got resistance above. We are holding the EMA ribbon, so, I don't know. It doesn't justify a short, but perhaps not a long either. Let's look at SoFi, another good one. Man, they just hate this stock, and you can get conspiratorial. Maybe it's the big banks, maybe it's JP Morgan, Jamie Dimon, these guys, the central banks. We can't have this young millennial type, up-and-coming remote style digital lender. I don't know. I think it's a decent company. I do think the economic moat is a concern, because if you just pay for good branding and a lot of their products can be replicated. At least that's what Wall Street says. I don't know, but these guys beat on revenue, beat on earnings per share, beat on EBITDA. Their growth is pretty phenomenal. Look at this compound annual growth rate on revenue, accounts, memberships. For goodness sake, what is not to love? And then you look at the chart. We have broken out, but just can't get that meaningful move. And if you zoom in, it looks like we might be double topping here around $7.50 per share. So, I don't know. I don't know where the zone here where you say if we're above this level, then I'm in, because we've seen it where we pumped above 10 and we come back down. We pump above 9, we come back down. Above 8, we come back down. I don't know. Doesn't really justify a short, but another one that's just hard to get long there. But I do like SoFi. It's hard to dislike a company that keeps triple beating. And let's look at Starbucks. So this is an interesting one. We saw this with McDonald's, where they had an awful quarter, headline misses across the board, but pumped. And they're up like 20, $25 in the past couple of days. And maybe it's Wall Street saying, okay, we knew you were bad, but you weren't as bad as we thought, so we're back in. You might be getting the same thing with Starbucks, where we got a headline miss on revenue, slight beat on the EPS. Growth was down, or not growth, foot traffic was down, sales were down. This was an international problem. Big miss in China, for example. But still, decent compound annual growth rate, 5, 6, 7%. It's an international brand, well-capitalized company. They should start to do well. And you can see in the chart, maybe it was partially priced in. They were going to miss. They were going to see weakness. We got this little bit of a double bottom here on this mega trend that goes back a number of years. And this circle here, this is where it was trading at the time that I pulled this chart. So getting closer to filling this gap here. And this could be an interesting trade. We could come up to 82, 84. It could be a bit of a bull trap where we feel like, okay, we bottomed. We fill this gap. Boom. We slice back down. So another one, tough to get long, tough to be short. But I would say the theme here is the market is going up and to the right over time. We've got Apple declaring tomorrow, Amazon declaring tomorrow. Jerome Powell is going to tell us that they're going to hold in the month of July, almost certainly. And they're going to start cutting in September. GDP is up, inflation is down, things are good. The idea that we're going to have this massive sell-off and go into this bear market, I'm just not seeing it. So I still think dips are a buy. And we're seeing these companies that are declaring pretty good results, like Microsoft at the front of this video. I'm just not seeing a reason to run for the hills. So if we get some nice dips for these companies that are declaring good earnings, I think they probably justify a buy if the valuation looks good for you. All right, folks, take care.